Hi, welcome to our video today. I'm Chad Griffith with the Griffith Home Team here at Innovative Real Estate Group. And today we are going to bring in our special guest here, Troy Vigil, to discuss taxes during tax season here. Welcome back to our video. Before we get started, I do want to point your attention to two tools below. If you are a home seller, you can click the link below to get your quick market evaluation of your house. And if you're a home buyer, you can start your home search right away. So today we have Troy here, Vigil. He owns his own firm for the last 7 years. And prior to that, he was an auditor for the IRS. So perfect time to bring you in here during tax season. Let's get started. The first question, what are some of the tax advantages to owning a home?
Well, thanks for having me, first of all, and that's a great question. There's really three advantages to owning a house when it comes to tax time. The first one is obvious. You get to deduct the mortgage interest and the property taxes that you pay on the property. So that's a tax deduction that you would take at the end of the year on your tax return, and that's the one that most everybody knows about. The second advantage is now that you'll be itemizing your deductions with the home mortgage interest, it opens up a lot more itemized deductions that most people don't deduct if they don't have home mortgage interest. So they usually just take the standard deduction, but now that they have home mortgage interest, they'll be able to deduct things like potentially medical expenses, their state taxes, charitable contributions, employee expenses that they have to pay out of pocket at their job. So it opens up all those things since they'll be itemizing their deductions now. And then the third one, and in my opinion this is the best advantage, is the exclusion of paying capital gains when they sell the property. If they live in the house for at least 2 years and they sell the property at a gain, they get to exclude a certain amount of the gain from capital gains taxes. If they're single, they get to exclude $250,000. If they're married, they get to exclude $500,000. One of the best tax benefits in America, I would say. So for example, let's say you buy a house for $200,000, you and your wife, today. 10 years down the road, it's worth $700,000 and you sell it. You guys made a gain of $500,000 tax-free. You don't have to pay tax on that gain. So those are really the three benefits, and that third one is what I would consider the best one.
Yeah, absolutely. No, that's a great point. Well, considering it's tax season here, if anyone owns a home, what documentation are you telling people that they need to file their taxes?
So the most important thing is the 1098 that they'll get from their mortgage company. That'll show how much mortgage interest they paid throughout the year. It'll also show what they paid in property taxes if they had their property taxes escrowed. If they didn't have their property taxes escrowed, in addition to the 1098, we would need what they paid in property taxes, and then insurance, and depending on if they have mortgage insurance premiums or points that they get to deduct. So there's really four things, but the most important is the 1098 that shows how much mortgage interest was paid throughout the year.
So kind of going into tax consequences for someone who's pulling out money from out of an IRA for a down payment, what are some of the things that they need to consider?
So the big consideration is to keep in mind that all the money in the IRA has never been taxed before. It's pre-tax money. So when they pull it out of the IRA, they got to pay tax on it. In addition to that, if they're not 59 and a half, they're going to be subject to a 10% penalty. That 10% penalty is waived on the first $10,000 if it's coming out of an IRA. So let's say you need a down payment of $20,000 and you have $20,000 sitting in your IRA. When you pull that out of the IRA, you're going to pay tax on the $20,000, and then you'll pay a prepayment penalty on only 10 of the 20, because the first 10,000 there's no penalty. So if you only need a $10,000 down payment, you won't be subject to the penalty, but you will pay the tax on it. And so that's the biggest thing to consider.
Well, that's awesome. Well, we certainly appreciate Troy joining here today. Obviously, this is timely given that it's tax season. If you need to get a hold of him or us, my brother and I, our contact information is at the bottom of the video. But we do appreciate you taking some time to watch our video, and we'll see you on the next time. Thank you.
Thanks for having me, Chad.
Yep, appreciate it.